What's going on, everybody? Jeff here. Welcome back to the channel. The sell-off continues today. A lot more choppiness inside the markets. It wasn't just AMC that sold off or GameStop, but the entire market. I want to break down what is happening to not only these two stocks, but the entire market. And one piece that I think a lot of people are missing, and I'm going to give you my opinion on it. So let's get right into it. First off, let's take a look at the SPY. Hard selling coming into pre-market all the way throughout the morning, tried to stabilize a little bit. And the last 15 minutes, that acceleration or the sell-off just accelerated even harder. If you look at the QQQs, which is the NASDAQ, same chart. You look at our small caps, IWM, very similar chart. Started to recover maybe just a little bit more, but the same thing. Hard pull at the open all morning, little recovery, hard pull at the end. And when you look at AMC, the charts are similar. Okay, now it would be one thing if the market looked like BioNTech, which we played a little bit today, where it was screaming and up, 8% over 10, about 10% at its high, but AMC looked like this, looked like the sell-off that it had today. That'd be a little bit more concern. But the reason why BioNTech was moving up and the reason why the entire market is selling off is a couple of reasons. One, investors still do need a stock to play long. Two, the Omicron virus is still inflicting fear towards investors in the entire economy. Now, when scientists did come out originally say that the variant won't be any worse than the Delta variant or anything else, there is still a lot of fear of what is happening, especially with lockdowns. You look at this title right here, is headline, Britain battles Omicron tidal wave as infections doubled every 2 to 3 days. This is causing panic inside the market. What is even causing more panic is this right here. And I've shared this with everybody, not only on YouTube, but inside the group. The Federal Reserve is having their last meeting of the year on Tuesday and Wednesday. Now, every time the Fed meets as of recent, the past 5 or 6 months, because asset tapering, inflation, as well as interest rates being raised is on the table, this meeting is probably more important than ever. They've established a few things. One, asset tapering actually has to be accelerated, okay? Which means interest rates are going to rise quicker than expected in order to fight inflation that was once portrayed as transitory, to which now we know it is not transitory. You have 3 things that are all bad and against the original plan that the Federal Reserve had, shared and planned for investors to bank on. That's not only causing panic inside the stock market. You look at the entire crypto market. Bitcoin down 7%, Ethereum almost 10%, Binance 8%, Solana almost 14%. The entire crypto market is being pulled as well as investors are pulling their capital. Now, here's the other piece to the puzzle that's happening, and I'm going to relate it to everybody. Just partially, this is my opinion on what I've experienced, not only being inside the stock market, but just from an economical standpoint. We've talked about the Evergrande, default and what's happening and how they were able to get away from it and skin with their teeth numerous times. Well, now the official default is currently happening. And as far as the specific details, not all of them are laid out. And if they are all laid out, they're definitely not made public, especially to us over in the United States, if you are in the United States. But while there could be speculation on who is backed up in this, who is funded with this, what other, big companies are going to be affected by this default, there's one thing that I want to point out. And this relates back to the Chinese economy. Read this headline right here. China banking on global financial crash fears as Beijing letting Evergrande collapse. And you can go look up a couple different headlines of China banking on financial crashes, okay? And China basically are trying to hope, right here, China appears to be hoping that a global financial and banking and financial crash will soften the blow of letting Evergrande collapse. There's a couple things that I've seen inside this market. And also most recently with the COVID-19 in March of last year, is that China, or the CCP, the Chinese Communist Party, they're one entity. They want world domination. They want to be number one, and they want globalization. Okay, that's been very apparent to me. While everybody else has their opinions, that's been very apparent to me. And what I saw with the COVID-19, okay, virus, especially when it relates on the financial side, I'm not in healthcare, okay, so I do not know all of the, the healthcare sides of this, but just from a financial side, what was happening back in February, okay, and March of last year, and watching the Chinese, economy starting to slow down, them starting to have their warehouses shut down. Okay. I remember our restaurants were still open, but they were only available for takeout. Okay. And then you would have to take your temperature before somebody would deliver your food. All right. And I know this because I work, with restaurants on the marketing side. Okay. But seeing all of that happening firsthand over in that economy and then watching it carried over to us. And that was as the most recent experience on how the Chinese will really try to take down everyone with them. If they go down, they're not dropping alone. They're going to drag everybody down with them. And that's exactly what they're trying to do with the financial side, with the collapse of Evergrande. And when you look at the markets, there's a couple things that are happening. One, you have the fears on our own economy, okay? You have not only the market selling off and everybody long on their positions selling off, you don't have any buyers stepping in order to defend that line because they don't know what's going to happen. Now, I expect tomorrow to be a little bit of choppiness, all right? You might see some volatility, okay? I did expect there to be a little bit of a pop right at the open and then an all-day sell-off, but we never really got that. Once it broke support about that 471.50 level on the SPY, it just continued down all day. And I wouldn't be surprised if we did get the same thing, a little bit of pop at the open tomorrow, and then a continued sell-off. Wednesday is going to be the first day to where at least we can figure out what is going on with our economy when it comes to the Federal Reserve side. The second is going to be how much this Evergrande crash is going to affect the entire banking industry. Because if it does affect the entire financial and banking industry, that is going to cause a serious pull in the markets. So what happens when there's a serious pull in the markets? And this is what I think a lot of people are missing. Not only do people exit their long positions, they choose to continue to go short on positions, okay, that are already inflated, that are going to come down, okay? They have different, margin requirements as now financial institutions are going to be like, wait a minute, we've lent out way too much money. Even if you're able to pay, okay, on, your loan, we still need that back. It's exactly what Bank of America did. All right. There was a lot of people in 2008, 2009, 2010 that were paying their full mortgage, but they over leveraged themselves. So what they would do, okay, is take your mortgage payment and direct it towards escrow and basically say you weren't paying your mortgage and therefore you defaulted on your home because they made mistakes. And that's exactly what is going to happen to where what is going to happen for us involved with AMC. This is when we're going to find out how many shorts are actually out there. Now we can look at Ortex and we can see the short interest data that's delayed 2 days, but Ortex does not go into, what was naked shorted, okay? How many positions are short positions are being held, all right, like synthetically or through the abuse of the options chain or so forth. This is when that is going to expose. But what has to happen first? The pullback has to happen. The market has to pull back, which is exactly what we're seeing today, which is why AMC is going to get hit. Potentially could be also long institutions just seeing that, they need to let go some of their over leveraged positions, which is natural. I mentioned that, a couple weeks ago in my videos. But when it comes to these positions that are insanely short on AMC, that's when it's going to come out. Now that does not mean that, like Adam Aaron even said in an interview, all right, with Melissa Leah, a week ago or so, it doesn't mean that the price is going to go to wherever our targets are or wherever other people have mentioned before. But that does mean we're going to figure out exactly, okay, who over leveraged, who's going to fall first, and who has to close these positions. But before that happens, we either go to the upside and it gets to be too much, all right, or we go to the downside because the entire market is being pulled. All right, so keep that in perspective when you are looking at your position. All right, I'm going to continue to monitor this. And like I said, getting through Wednesday is going to be our first hurdle. It's going to be how quickly is that asset tapering continuing and when are interest rates going to rise? Are we going to provide some ease to investors, which the Fed has done a great job of doing that, right? You have to keep that in mind. And then next is going to be how hard the Chinese economy, okay, and the CCP is going to try to pull us down as well. So guys, that's it for this video. I'll see you in the next one.